Tuesday, August 5th. It is a big earnings week. We're going to go over PLTR. We're going to go over tonight's earnings with AMD. We're going to go over a lot of things. I'll give you a housing play because I think I'm going to go over some of the things that I'm seeing in the market. If you didn't just listen to Donald Trump on CNBC, it was a rambling interview that was kind of contentious at times. I don't think Trump ever got pissed, I think, but it was interesting. Every time that Joe would ask him a question that was a little confrontational, Trump would call him Andrew, which I found kind of interesting, kind of funny, kind of deflecting. We will go over a stock that was up 64%, and one that is the top second half stock from Steve Gress was up like 74%. We'll go over stuff like that. And again, like I said, the earnings, we'll go over everything of that sort. Let me start out by telling you we got a stock removed yesterday from the Alpha Picks portfolio. Okay, this is a rules-based portfolio. So you got an email yesterday to take a stock out. It's a rules-based portfolio. One of the rules was broken. The stock particularly stayed at a hold pattern for over 180 days. It was a losing position. You can't win every position. The portfolios overall and even short term in like 3 months and 1 month, they're beating the S&P. That is very hard to do. This particular stock was picked in January of 2024. Go and analyze the stock chart if you are an Alpha Picks member to see where you could have sold it yourself. And this is what I'm telling everybody. When you get a pick, I'm changing some of the rules for myself. If the pick yesterday, if you were upset that it wound up to be a losing position, go and look at the chart to see where you could have sold, where maybe you could have bought back in, where maybe you could have had some gains. Because again, that stock, there was a lot of learnings that I did when I looked at this one. And I didn't sell yesterday. I did not sell. So full disclosure, I did not sell this stock. Part of the reason is because the stock is also in the core portfolio, and it is also a stock that I've held for a very long time. So I did not sell out, but if you are upset at that one, I would urge you, go and find a strategy that works. Try things that are different. If that made you upset because you bought in and then you lost, go and find something that works, okay? Because I tell you all the time that I know things that work. Well, you know what I don't know that works? My own damn advice. Hood yesterday was up 5%. It's at $105, okay? You had the chance yesterday or Friday to buy this under 100. Again, under 100. That was my rule. Did I follow it? No. I thought, you know what? The 4-hour algorithm got me out. I'm going to wait till it gets in. And I waited too long. Am I ever going to get the chance to get it back? Maybe. The 4-hour algorithm makes you 50%. It wins 50% of the time. It makes you 831% versus 749% if you buy and hold. Again, the average win is 36%. My decision on Friday was I'm going to wait for the 4-hour algorithm. I just gave up 5%. So again, my rules, my thing, it's my money, your rules, your money. If it made you upset, you have to find something that works. But the overall portfolio, the logic, the rules, this works. So even though it's a losing position, look at the total return of the portfolio. You're not going to make 100% wins. Okay? So that's my guidance to Alpha Picks subscribers. If you're not a subscriber to Alpha Picks, I do suggest you get this bundle, okay? It's on Linktree right here, the second link. The bundle includes Seeking Alpha Premium and Alpha Picks. You save $150. The reason I tell you that is because when you go and do your research on these Alpha Picks, you can find other stocks, you can find other opportunities. You can do a lot. As I go through all these articles, understand that's what I do. And part of the thing that I'm looking at right now is a rate cut coming in September. We saw when the jobs numbers came out, the September rate cut expectation in Polymarket shot up. Maybe that's why the market was up yesterday, is because the pullback on Friday with the jobs number, everybody knows you've got a safety net of the Fed if things really get bad. You've also got a safety net of the taco trade. Trump always chickens out. So again, maybe that's not priced into the market, is the September pullback. I went over yesterday. I read quite a few articles on Seeking Alpha yesterday, which included 3 predictions for the month of August: recession or growth scare, being prepared for the market when it makes its move. For me, Seeking Alpha Premium helps me understand even more than I already know. Everyone has a bias in the market. You always think you know, and then the market will humble you. You have to know both sides. You have to know. And that's why when you go to a stock in Seeking Alpha, okay, I go to Apple and I say, you know what? I have a bullish thesis on Apple. It's just about when AI comes in. I want to know the positives and the concerns raised by each of the analysts. And I can get that in Seeking Alpha Premium. The question I have for you to answer today is the next 500 points in the S&P or in QQQ, or the next $50 in QQQ. Is it up or down? That's what the articles help me try and make my assessment. It's not just about finding my own thesis and putting it out there. It's about understanding that there are risks in the market, and when you put your money in there, you have to understand the risks. The rewards will come. Is there more upside in the market? Is it too extended? Are we heading into a recession? This article in particular, distressed consumer feeling larger discretionary pinch. I was in Macy's last night. Okay. I was looking for pillows to sleep on my, just bed pillows, normal pillows. The store shelves were empty. Now, I'm not sure if that's Macy's, because Macy's is a quote unquote failing retailer and they're managing inventory, or is it tariff related? Because I also listened to a podcast last night that said Halloween is going to have 30% fewer costumes on the shelves. There will be no sales on Halloween costumes because they imported less. Old Navy said, hey, how we're managing the tariffs, we're not raising prices, but we're also not giving a back to school 50% off everything in the store. So back to school and Halloween will be a determining factor in how good the holiday season is this year. If you see fewer goods on the shelves and you see higher prices, that just means the tariffs and the merchants decide to import less and raise prices. That's supply and demand. That's inflation. So if you get a rate cut in September, okay, if you think that's a sure thing, what's a sector that will benefit? I mean, just that's how you have to think about these things. That's the logic behind some of the larger wins that I've had. Short-term wins, not long-term wins. Because remember, long-term wins, it's about buy and hold. All of this little tariff stuff doesn't matter. But short-term, if we get a rate cut in September, what's going to benefit? It's housing. So let me just give you, Brandon brought this up. Brittany Bitch brought this up yesterday. And by the way, that's a loving nickname that we gave him long ago. But he brought this up on YouTube yesterday during the live. And he said, hey, what do you think of this one? He's got my 4-hour algorithm. He's got the TrendSpider, annual plan. What do you think of this one? DRN, David, Robert, Nancy. It's a triple leveraged ETF on real estate, because what will benefit from a rate cut? It's real estate. Now, here's what you look at. The performance chart going back 24 months on this 4-hour algorithm, you make 25% versus if you bought and held, you lost 6.9%. Now, you don't win a lot, but your average win percentage is 15%. If you think that we're going to pop up in the month of September, maybe watching this one and setting an alert for an entry makes sense. But overall, we're still in an AI market. And it's still, and make no mistake, this is still an AI market. You've got AMD with earnings tonight. This in particular is a fantastic list that I will post in the newsletter. Okay, it goes over all the energy and utilities companies, the data companies, the nuclear energy companies, the data centers, the cloud and data centers services, the networking, the electronics, the storage, the servers, the cloud service providers, and the semiconductors. It's all broken down for you. This is like fantasy football. Go and pick your winners. And if you want quick trades, you have to find some of these like little catalysts that come up. Like, for instance, the U.S. to unveil major plan for American drone dominance. What are those companies? Well, Shai puts it out there for you. ONDS, RCAT, ENVX, KTOS, UMAC. Again, I will put all of this in the newsletter. These are things that you can make short-term, or if you want to develop a long-term theme of buy and hold, a more technical kind of YOLO trade, where you're just going to buy and hold these, or you're going to trade them on some strategy, one or the other. That's what you have to do. And so again, that's how you set yourself up for success. That's how I use these tools. I read quite a few articles yesterday on Seeking Alpha. I'm a bull in what potentially could be a seasonal bear market. So what am I doing? I'm setting myself up. Okay? Now, Steve Kress posted a new one yesterday. Here's some cheap stocks, the top stocks under $25. One of them, HRTG. Okay, I've brought this one up before. What's my thesis on this? Well, you go over here. It's the top stock. Again, this is Seeking Alpha Premium. You go down here to the top stock, and you can see it's the top rated quant stock. And let's just look at it. Quant, strong buy. Valuation, it's not expensive whatsoever. This is an insurance company, and its PE is 6 going forward, 6 times forward earnings. The actual sector trades at 10. Okay, with its growth, the PEG ratio is 0.16. The sector's at 0.57. Anything below a 1 is considered, oh my God, it's got tremendous growth. So let's go over and look at growth. It's 11% revenue growth. Where the sector's growing 6%. Profitability, they don't have great gross profit margins, but their return on common equity, which is an insurance staple, that's an A. Then you got momentum. Okay, 1 year up 174%, 9 months 106%. How did you get this before? I brought this up a few months ago. It hasn't done well over 1 month, down 10%. They report earnings today after the bell. This one might be interesting. I'll bring it up later. I brought up yesterday, Hamid, who's got a tremendous portfolio that you can follow on Savvy Trader for free, and he's only got 9 positions in his portfolio. He decided to get into American Eagle. Why? The thesis is they sold out of the damn jeans. And then Trump comes out and he starts promoting Sydney Sweeney, because he found out she was a conservative. So what did you have happen yesterday? This candle in the morning was up 17%. And Hamid got in there because he did his research over the weekend and he said, I think this one's going to blow. It is a long-term buy and hold for him. He's not somebody that gets in nilly-willy. He does his research and he liked the theory on this one. Remember, Chris Camillo was short American Eagle. But then it came out, they're sold out. So, one that I liked yesterday, IDXX. This was up 26% yesterday on earnings. I just want to point something out to you, okay? This is a screenshot of Sidekick. And let me go over to Sidekick and show you. I'm going to go to IDXX and you're going to see the chart. Okay, we're going to pull up a daily chart because that's where you'll see all of the, I basically went down here. Let me get out of this picture so I can show you the process of what I did. So Nancy Pelosi, stock trader. It's insane that politicians keep getting away with this. IDXX develops biotech products for livestock and agriculture. It was flagged 3 reasons. 1, in the span of 60 days, 3 separate politicians bought IDXX. Around the same time they all bought, Congress introduced the National Biotech Initiative of 2025 to boost biotech funding. Number 3, the act was then referred to the Agriculture Committee, Foreign Affairs, and a couple of others. The 3 politicians who all bought literally sit on those committees where the act was referred to. The stock just crushed earnings. You can see it was up 30% yesterday. Now, I saw that. Okay? I saw that, and I went to TrendSpider. And I said, IDXX, let me look at it. And I will bring up Sidekick for you to show you what I did. IDXX, can you see any government buys by representatives for the stock in the past year? It lists all of them. This is Sidekick. This is their AI that's going to be integrated. If you don't have it, you can email me if you're a subscriber. But this is integrated into TrendSpider. It's going to change the game. Then down here, I asked it, can you post these on the appropriate dates on the chart on my screen? This, by the way, 2 weeks ago, it was not that easy. I had to go through, describe it, tell it exactly what I wanted to do. It has gotten significantly better over the past 2 weeks. Again, it's still in beta. It's going to be new. But here are the buys. And you can see during this time when everybody was buying as it was going down, that was the time to get in. Now it's up. And you can see this dude, Republican, he sold out of 100,000 of this at 517. Where are you trading right now? You're trading at $680. Douchebag got out. Right after he got out, another guy bought. But that's Sidekick. And that's how AI is changing the game. And again, if you want to see one of the articles, this is IDEX. This is going on the watch list because it's it had such great earnings. I'm going to put it on the daily stock pick watch list so that anybody who has TrendSpider through me can actually scan on it. Because let's see how the 4-hour algorithm works on this. Well, it makes you 24%. Buying and holding makes you 23%. It got you in at $533. So had you known that this was heavy governmental stuff, and you know what? I want to be in there because a bunch of government officials are buying it. They may know something. They're on the committee. Boom. You would have had a nice 27% gain in just 12 days. That's how you use the tools. Okay? That's how you use them. And you had a couple of things yesterday, okay? COMM. COMM was way up yesterday. We talked about this because this was the top second half 2025 pick by Steve Kress. It was one of them, one of 10. Okay? This one was up 70% yesterday. Let's go and look at COMM. 27%, I think it was. Let's see. 86%. This was up 86% yesterday. Had you just bought the 4-hour algorithm on June 23rd because he made the announcement on June 15th, and if you said, well, I don't want to get in because it just got you out, or it's about to get you out because you understood the 4-hour algorithm, and you said, I'm just going to buy the next time, you got in at $625. Where are you trading right now? You're trading at $14.46. Again, 143% in 42 days. And there was another one yesterday, okay? Steelcase, HNI acquires them for $2.2 billion. This was up 66% yesterday. And this wasn't on any watch list. I'm not looking at any of this stuff, but the 4-hour algorithm had you out. Got you in at 1705. Would I buy right here? No. Would I have bought this stock? No. I wouldn't. This is in a downward trend. There is no way this would have shown up on any of my scans. The 4-hour algorithm doesn't work. but I'm sure there's a strategy out there that had this one working. So it's interesting. One of the things I noticed yesterday while reading some of these articles, this is what's crazy. So this stock by Steve Kress, meme mania or big tech stocks, the best buys with short squeeze potential. And then in the upper right-hand corner, those are the stocks he mentions. Look, yesterday alone, this was published at 8 a.m. You could have gotten into Donut. It was up 7%. Open at the time when I just clicked this, it was up 16%. Rocket up 1%. KSS up 6%. Sezzle, all of them were up yesterday. I think that's super, super. Look, they're up today. It's all green. So again, a lot of these tools you can use. They're all right here on Linktree. The top one is TrendSpider. You just saw me use AI. You will get access to Sidekick. I think it's coming in the next 2 weeks. And if you have a TrendSpider and you want access to it, just email me, message me on any platform. Again, Linktree has all of the contacts for you to get in contact with me. But TrendSpider for $50 a month, you've seen the 4-hour algorithm. You've seen that. And then if you want Seeking Alpha Premium and Alpha Picks, we just talked about the Alpha Picks portfolio performance. Again, these are the tools that I'm using. I'm not using anything that's crazy. Now let's talk about earnings. Palantir is currently on pace to open trading at a $400 billion market cap following its earnings. It's now double the size of United Healthcare. United Healthcare was almost 10 times larger than Palantir just 1 year ago. That's the market cap, okay? This is Palantir. That's United Health. Which one would you rather invest in? Because Palantir is super expensive right now. It's even more expensive. I mean, yesterday I said the valuation is crazy. It is 265 times forward earnings. The sector is trading at 23. And United Healthcare, even with their billions of dollars of revenue, they're only trading at 14 times forward. Okay, the sector's trading at 16. Which one would you rather hold? Because Palantir beat and raised. I'm not sure this is ever coming down. Okay, that's how good this company is doing. It closed almost 9% up when they announced it. It was up, and it's now up 6%. Okay, the market just opened. It's up 6%. The valuation still doesn't make sense to me. Go and read about their earnings. They were spectacular. The market cap, $364 billion. It's going to be close to $400 billion. I will make a prediction here. Palantir will be a $1 trillion company. It will. The market cap will be $1 trillion. Now, I don't know if that's next year, if that's 10 years from now. It will be a $1 trillion company. The short interest on this is 2.37%. Nobody is crazy enough to short this. And had you just listened to the sentiment vote of Seeking Alpha, this is a simple fact of supply and demand. That's all stocks are, is when the supply starts getting short because everybody's holding it, the price is going to go up. It's just going to go up. And again, I don't know when this is going to be a $1 trillion company, but it will be. And here's the case. Okay? Well, not the case. But had you just listened to the Seeking Alpha sentiment, those who invested at the juncture of just Seeking Alpha subscribers multiple times over the past year with recommendations for outsized returns and even as the best AI stock to watch in 2025, if you had just invested at the juncture of those two articles being posted, you're up 345%. So again, Seeking Alpha is a critical tool. Am I invested in this one? No. But the Seeking Alpha Roundtable, what's the best AI stock to play right now? One of them was Palantir. Jack Bowman. Again, he was saying this when Palantir wasn't at, wasn't at 160. Palantir has been in the core portfolio. It is one of the outperformers in the core portfolio. The 4-hour algorithm got you in here at $139. You're trading at $175. This is going to gap today, okay? There will be a gap. Unless some type of catalyst brings us down, there will be a gap. What happened the last time you gapped up on earnings? You had the ability to buy it as it filled the gap back. That's my plan. I want this one. I'd like it to get back to 121. While it was up here at 140, I was saying, oh, it's going to get back here to 80. Maybe it does. The valuation just doesn't make sense. But again, this is one of the mistakes that I've made. Hood, I brought up before. Hood is another mistake that I've made. Axon. Okay. This article. Let me just open this article because this one, SA Roundtable, what's the best stock right now? If you go down here, there is one, Nebius, NBIS. And here it is. The same guy, Jack Bowman. I love looking at mid-cap firms because of their potential for incredible success, but I don't always love owning them because of the potential for big losses. It's far easier to double the market cap of a firm like my pick for the up-and-coming AI stock Nebius, valued at $12 billion. Nebius reports on Thursday. If they beat and raise, is this one a great buy? Well, probably. It's trading at all-time highs. We just passed that previous highs of 47. We can go back here and look a little bit. You can see how this one kind of traded funky here because it was an old company that was just changed things. You had a golden cross right here. Where was it trading? At $40. You're trading at $54 right now. Algorithm has you in at 52. Could this one beat and raise? Probably. It's expensive. You know what else is expensive? Axon Enterprises. This is up 17%. They beat and raised. Again, Axon's expensive as well, but they beat and raised. This is a growth market. That's what you're getting paid to be in, is growth right now. That's the signs of a bull market. Are we going to have a pullback? Not with earnings going crazy like this. Again, it's earnings that are driving everything up. And Axon is up. Look at this weekly chart on Axon. This is a stock that just has not given you a huge opportunity. Here in March, you could have gotten it as it pulled back to its 50-day. I don't want to buy this one right now. It doesn't feel comfortable for me. Am I getting in? No, I'm waiting for it to get a bit more realistic. Will I miss out on it? Maybe. My money is invested in things that are worth the risk and reward. If this is worth the risk for you, then you'll enjoy the reward. Again, it's up 17% today. So kudos to those that took the risk. I'm not one of them. Melly is one that I've loved. They traded lower as Q2 profits fall. It's pretty even right now. Melly, I have made my determination that I'd like it lower. This one had really, really good. I recommended it right here at 2029. I wish I would have gotten it. I didn't. And you can see trades lower as profits fall short of expectations. Don't just read the headlines, because when you just read the headlines, then you don't get this. Signals sustained commerce and fintech acceleration as credit portfolio surpasses. This is one of the benefits of Seeking Alpha Premium. These summaries of the calls are fantastic. The summaries of the earnings calls give you so much information. I'm even more bullish on this one, and it has just turned positive. Again, it pulled back negative. But I don't want to buy this one way up here. I want to buy it on the pullback. It's still at the bottom of this trading range. We went over this yesterday. It's at the bottom of this trading range. It makes sense to buy it here. I just don't feel comfortable. Am I okay missing out? Yes. Yes. Again, risk reward. It's not for me. It very well may be for a lot of people. Another one, HIMS. They dropped after a revenue miss. They beat on earnings per share. So it caused the stock to slide. Now, this was a very clear one. And I said it yesterday. I said we could go up 50% on this one. If you get a short squeeze, if you beat and raise, you could go up 50% on this one because it looked like it was good. The valuation hasn't mattered on this one at all. But what has mattered is this $64, okay? You saw it pull back here in February. You saw it pull back here in May. You saw it pull back here in June. You're seeing it pull back here now, and you're at $55. If the risk is worth it to you, start buying now. Start buying, because the 55 to 64 may be enough of a reward. That's the way you have to look at it. Is the risk reward worth it? And you could put 49 as your stop loss. What are you risking to get that reward? I wouldn't own this one. I don't like to own this one. It is super expensive. Go and do your research. Now, we talked about Heritage Insurance before. Its earnings preview, scheduled to announce. The consensus is $1.01 and on earnings per share and $212 million. It's a 65% increase on earnings per share of 4.2%. That would be huge, and this one could move up. So if we go to Earnings Hub, again, this is just a website. You don't have to subscribe to it. This is all free. What'd they report last time? 99 cents. 99 cents. They were expected 45 cents. They beat on earnings per share by 120%. It's insurance. They missed on revenue. Now, when you look at HRTG and you look at the performance, the momentum, it's an A+, because but in the 3 months, you're only up 11%. That sounds horrible. In the short term, you haven't gone up. Again, this one is up 2.83%. Over 1 month, you're still down 7.7%. So maybe it's just making a rebound here. I would be watching this one. I like this one. I may just buy this one in my Webull account and just put a few $100s on a bet that this one goes up. Again, position size matters. Over the last year, it's beaten earnings per share 100% of the time and has beaten revenue estimates 100% of the time. Over the last 3 months, earnings per share estimates have been upward revisions 3 times, none downward. Revisions on revenue have seen 0 upward and 2 downward. That could be a bad sign if their revenues actually go down. I don't know how the stock market would react. I just don't. Is the risk reward there? Maybe. We talked about shorts. Open Door reporting tonight. It's set to announce. Let's see. Is this one up in pre-market? Nah, it's kind of flat. It's doing nothing. It's at $2.46. So it's not up. Maybe this is a short squeeze that makes it worthwhile. Is the risk worth the reward? The consensus, earnings per share minus 0.02. Maybe they turn a profit. Over the last year, Open Door has beaten estimates 75% of the time. Over the last 3 months, earnings per share estimates have seen 4 upward and 0 downward. If they report something good, expect the short squeeze to push. 19% short squeeze. It could push. Also tonight, Supermicro's reporting. What are they expected to do? I don't know. They're up 1%. SMCI's chart, it's been really good. Really, really good. 4-hour algorithm makes you 95%. In this one, it got you in April. Let's move this up so that we can see it. You're up 77%. Going in hot into earnings. It's a good one. Again, Supermicro, what do you expect? Historically, SMCI has delivered strong earnings. Consistency, beating 88% of the time. Then you've got AMD tonight. AMD Q2 on deck. I don't own any of these. Am I planning on buying this one? You've broken that downtrend. That downtrend was on a weekly right here. You broke it back in April. when it was trading at $106. It's trading at $176. Where did I get that yellow line at 164? It's from the 2021 highs after you shot up just like you have just now. So you've seen it provide resistance here without support. Am I expecting this one to blow it away? Probably. It's expensive. Again, most analysts are bullish on the stock, with Seeking Alpha analysts at Wall Street having it as a buy, but the quant says it's a hold. You have to realize, is this one worth the risk reward? One that I've had on my watch list for a very long time, Arista Networks. The consensus is 65 cents per share. That would be 69% down year over year. The consensus revenue up 24%. Over the last 2 years, Arista Networks has beaten earnings per share 100% of the time and beaten revenue 88% of the time. ANET has been a winner since April. You're still in this one. I think, from June 25th at $95. That's running into these earnings. Got some gaps all over the place. It's messy. If we look at a weekly chart, you broke the 50-day, which the last time you did that was way back in January of 2023. This was the time to buy. Is now the time to buy? Is it going to pass the $132 and move to all-time highs? Maybe. We can go look at, the quant has it as a hold. Wall Street says it's worth $111. Is the risk worth the reward? Again, that's what you have to decide. And let's just talk about IPOs, okay? We got through earnings. Because Firefly, this one is another, everybody asked me about FIG. And let's just go and look at FIG. This is Figma. And this one, no 4-hour algorithm. We have to look at it on a short-term chart because it's only been open for a few days. Now, if you got it on open, say at $110, okay? You had the opportunity to make 30% if you had a strategy to trade it on. Do you have a strategy to trade this one? Because if you didn't, and you just said, well, I'm going to sell it, where are you selling it? Because right now, you are down 17% if you bought at that. If you bought at the highs, God forbid you bought up here, you're down 36%. You got a gap here. But again, you have to know how to trade these. Maybe it's a 1-hour stock battle. Let's see how this one works. No, you don't have any entries in this one at all. Maybe it's the 65-minute. Let's see if you have any entries in this one. Got you in and then got you right back out. I don't like IPOs, okay? But what do you have to know about Firefly? Okay? By the way, all of that I looked at, you can't have an IPO with a fundamental unless you're going to buy and hold for a very long time. All of that I just showed you is a technical strategy. CoreWeave. We can look at CoreWeave. That one's been out for a while. That was one that IPO'd. We can look at a 4-hour on that one. It IPO'd just earlier in the year, 4 months ago? The 4-hour algorithm got you in here at 41. You didn't trade this one on the IPO. You got in here at 41. Got you out with a 269% gain. Just got you back in at 104 and you're trading at 111. Does that mean we're going up? Not necessarily. It's still a little bit expensive. Understand your fundamentals in this one too. And so are you going to lose on this one at some point in time? Well, right now, your wins are 100% because at $104, you've made money at 107 and you made money off of this trade. It's only 2 trades. So it's got a 100% win rate. Do I expect that to continue? No. You can look at Circle. Same kind of thing. Circle gets you in and got you right out. It's got a 100% loss rate. But it didn't get you in on the IPO, but you had that nice pullback. Again, this is part of the reason why you need to understand what you're actually trading. And why I don't like IPOs. It's risk reward. But the next one, Firefly, okay? We have no information on it. They plan to offer shares between $41 and $43. That's up from an earlier range of $35 to $39. FIG had very similar things going on. FIG had huge demand, and it's called, the demand. I forget what the demand's called, but FIG had a huge demand. So when they priced it at $20, again, FIG was priced at $20 when it first came out. That's when it first came out. You're at $91 today. It opened up literally. You can see the 52-week range. It opened up at 33. It was priced at 20. When they raised it to 30 the night before, that was great, but it was oversubscribed. That's the word I was looking. Oversubscribed. Demand was huge, which meant that supply was limited. Demand was huge, which meant supply was limited. It's the same kind of economics. And to level it out, the market doesn't just throw shares out there. They sell a little bit at a time. That's why you saw it open up at 1 p.m., 2 p.m., somewhere around there. And it opened up over 100. Even though insiders got this at 33, they were initially offered at 20, and they saw huge demand, went up to 30. Some people said 40, okay? Understand this. I expect Fly to do the same thing. They're going to start raising their price. The company wants to sell stock at the highest price before it goes to market because, again, that's the company getting all of that money. So when Figma sold to insiders at $33 and the stock rallied to 100, those people that got in at 33 are the ones that made the money, not the company. The theory on FIG was that there were high net worth people that the banks paid back. Okay, you may have gotten your 1 or 2 shares through Robinhood at like $33. But as a high net worth person, I can call Fidelity and ask them for thousands of shares at $33, even 100,000 shares, knowing that it's oversubscribed, and I may get them. I may be limited in when I can sell, but I may get them. So again, understand the dynamics that are at play. They want to get it out there with as high a price as they can. And if it's oversubscribed, those people have to go to the open market and buy it. And when they go to the open market, like Kathy Woods, she bought on the insider track and she bought on the open market. But again, that's the supply and demand. It's part of the reason I don't like IPOs is I'd rather have it settle in and have a strategy to actually trade it. Right now, I don't even know about, all of the valuation of Figma. I don't know all of that information, so I can't make a determination. I only have a few candles, and the candles don't have a lot of moving averages. So I want to trade that one. I don't want to own it. Now, the newsletter. The newsletter is free. You can get it right over here. You can go to the newsletter. It is free during the week. You get free one. So like yesterday, I post what's called the scans at the end of the podcast, at the end of the newsletter. You can just scroll down here. These are stocks that are bullish in the 4-hour algorithm. Because Friday was a down day, we didn't have much. We had Coke, we had Sherwin-Williams, and Biogen. So today, again, Coke kind of appears on there. It's just floundering a little bit. Still has you in at 68.72. You also have Home Depot. I'm not going to go through all of these because yesterday was a big day up and I've got quite a lot. So if you want it, go to the newsletter, subscribe to the newsletter, and go and look for it. Okay, that's it for today. Hopefully today we have great earnings from AMD, from SMCI, and other things. Again, risk reward. That's what you have to put in play. And if you're worried about this stock market being at all-time highs and that we're going to have a pullback, understand Friday wasn't that pullback. Friday was, hey, there's a bad jobs number, and then Trump fires the head of the agency that does the numbers. That was the pullback. You have to pull out the noise. We're in a good market. We are in a bull market. There is no doubt about this. And every dip is getting bought. And if you're worried about, when do I buy in? Take emotion out of it and get a strategy that back tests well, like the 4-hour algorithm. It had you out. Okay. I didn't sell. I used this like I use an analyst. When it told me to sell on Friday, I didn't sell. I wound up buying more. Why? Because every dip that I saw on this entire way up was bought, and we haven't changed direction. and I saw it dipping under that 50-day. And I said, you know what? I want to take the opportunity to buy. And that's just it. Risk versus reward. I put a 5-year time limit. Any stock that I bought on Friday, it's a 5-year time frame. It's not like I'm selling in the next month or two. 5 years. And if you go and you look at a 5-year timeline, where was 5 years ago from 2025? It was way back here. Okay, August 3rd, 2020, 5 years ago. Trading at 260. Where are you right now? 565. Simple as that. I expect this trend to continue. Will I see a 40% pullback? Maybe. But that trend line is pretty damn good right now. And if we continue on that trend line, then I'm pretty happy. So if you have any questions, hit me up. I will talk to you tomorrow. Okay, see you. Bye.
Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears. Tune in daily, don't miss a single show. Sign up for the newsletter, let us help you grow. Taking risks, making moves, seeking success. Together we'll conquer, no room for any less. Every morning I wake up to the sound of the trading bell. My heart starts to pound. Daily stock pick trading podcast in my ears, guiding me through my hopes and fears.